Good afternoon to everybody who's joined us this afternoon, and you're very welcome. My name's Jo Edwards, and I'm delighted to welcome you to our webinar all about the winter economy statement that was delivered by our Chancellor Rishi Sunak last week, covering all of the new coronavirus business support measures. I'm joined today by partners Stephen Sanford and Neil Driver, who are going to take us through all of the various elements of the announcement and give us some explanation into the detail that came out soon after. We will have a Q&A session at the end of the presentation today, so if there are any unanswered questions that you would like to ask, please use the Q&A panel. If you're familiar with Zoom, you'll be familiar with this. If you're not, go to the toolbar on Zoom and you'll see a little icon there that says Q&A. If you click on that, it gives you the ability to ask your question, and we will try and answer as many of those as we can when we get to the end of the session. So hopefully that's all clear. We are recording this so we can make an on-demand version if you'd like to rewatch or go back to refresh your memory on any of the points made during the presentation, and that will be available on our website later on today. So what I will do now is hand over to Stephen and let you take the first session.
Thanks, Jo. Good afternoon, everyone. So just as we were thinking that furlough and loans and all of that sort of stuff was coming to an end, we got the announcement, which actually was quite needed, but for us as accountants has been interesting and fun now, winding ourselves back to March, and when we had to learn all the rules pretty quickly for furlough and so on and so forth. We have a whole now new heap of rules that's coming in from 1st of November. So just to confirm what we're going to go through this afternoon. So I'm going to speak on the first 2 points, which is the job support scheme, the JSS, and the new or the enhanced self-employment income support scheme known as SEISS. Then my colleague, fellow partner Neil Driver will then speak on bounce back loans, other loan schemes, and touch on sort of extended tax deferrals and how it's working with a reduced rate of VAT. So moving on, I guess we'll start at the job support scheme. So not to be confused with its brother, sister, the furlough scheme, but this really, the incentive for this, unlike the furlough scheme, which was just to help people during the COVID crisis time, this scheme has really been designed to help employers during this time and basically stop redundancies being made if there's a really great employee that the employer has. I said it's by no means as generous as the furlough scheme, and I say that was intentional. And it's really, you know, that decision that once the furlough scheme ends October, would an employer have made their employee redundant at that point? And this is really an incentive to try and make that employer really think hard about is it you know economically viable, efficient to make that employee redundant, or is there any way we can try and keep them? So the scheme is open to all SMEs, so small, medium-sized businesses. So just to confirm that, an SME is really it has to be 2 of the following 3 things, which is 1, turnover needs to be less than 25 million, 2, employees less than 250, and 3, gross assets of the business less than 12.5 million. So as long as you qualify for 2 of those out of the 3, then you're fine to qualify for the scheme. It is open for larger businesses as well, who are affected for crisis through lower revenues, but there are certain conditions attached. And this is some of the things that we've seen, that the headlines came out and then slowly more and more bits of information has crept out. For example, with larger businesses, it seems like that no capital distributions will be allowed if you are operating this scheme. So for example, paying a dividend while using this scheme. So just to clarify though, that is only for large companies, and I say that it hasn't been 100% confirmed, but that's what the feeling is. So the job support scheme, it's around for 6 months, starts from 1st of November 2020, with the first claim to take place from the 1st of December. It's important that to qualify, your employee must have been on your payroll on or before the 23rd of September. So for those of you watching that had furloughed employees when there was the date of the 19th of March, very, very similar, where the announcement was made after the date that the employee would have been already on your payroll or on your books. So 23rd of September, they had to have been already on your books. And interestingly, neither the employer or the employee needs to have previously used the furlough scheme in order to apply for the job support scheme. So moving on, how does it work? So you may have heard some of this. This is some of the headline stuff. So the employee has to work for at least 33% of their usual hours. They can work more. There has to be a minimum of 33% of their hours. The employer pays the wages plus national insurance and pension contributions for the hours worked in full. And actually, there's again a nuance and the information that's coming out. And to clarify, because this wasn't really well publicised, is what employers' national insurance and pensions does the employer have to pay? And our understanding is at the moment, and it is the ICAEW's understanding as well, but we're still waiting for guidance, that like the furlough scheme, certainly in the latter point of the scheme, that the employer will have to pay the employer's NI and pension on both the 33%, the additional amount, which I will talk about, the additional wages from the employer, and the government grant amount. So the cost to the employer is not light, and that's important. It's a careful consideration that the employers now need to make. It's not a quick decision perhaps like furlough was. So the government provides a grant for 1/3 of the hours not worked, which is capped at £697.92 per month, seemingly a somewhat random amount, but I've done some sort of maths jiggery-pokery to try and work out where they got that from. And I think the logic is that £697.92, which if you divide that by 22%, which is the maximum effective help that they are giving employers and employees, that comes to £3,169. £3,169, if you times it by 80%, which is coming back to how the furlough was calculated, 80% being the cap on the original furlough scheme, comes back around to about £2,500, which was the maximum amount of furlough. So that's sort of the logic of where they've come to it, albeit they're capping the help at this 22% is the maximum, compared to obviously on furlough, where originally it was an incredibly generous 80%. As I said, the employer must also pay the employee for 1/3 of their usual hours that are not worked, and this perhaps again hasn't been in the headlines. And I'll give you an example of perhaps how it's going to work moving on. But that's an important point. The employer not only has to pay for this 33% or more, if 40%, 50%, whatever you're going to reduce their hours to, but also whatever's left, 1/3 of whatever's left, the employer has to pay, effectively paying the employee for no output at all. But that's part of the deal of keeping them on. And so the employee also have to give up 1/3 of the remaining amount. I said I will touch upon this and go through a little bit of an example on a few slides down. Just as a few other points to note, which is each short-term, the working arrangements need to be a minimum of 7 days, and also the job support scheme is a change in employment. And these are things that perhaps people have missed, and this was the same with the furlough scheme. A change of employment status means that there should be a change in the employment contract, and that should be updated and reflected and communicated to the employee in writing. Okay, so yeah, as the next slide states, so what about redundancies and top-up? So interestingly, It cannot be used, this job support scheme cannot be used for employees on notice redundancy or who've been made redundant, which is perhaps in contrast to the furlough scheme. And you also cannot have the top-up element that also was around in the furlough scheme. Okay, so moving on. So what does this mean? Well, employees on short-term working will receive at least 70% of their usual wages. This is what the government are, the headline, this is what they're saying. However, it's interesting that in effect, the fewer hours an employee works, the more expensive each hour worked is to the employer, but the lower the overall cost. Again, I will explain this. I've got a little slide to explain this. And also, interestingly, employers can use both the JSS and the job retention bonus scheme, which was announced a couple of months ago, at the same time. So the job retention bonus was if you're going to keep someone who was on furlough and you bring them back into employment and you keep them for 3 months, then by the end of January, then you get and you can prove that you've paid them and it's a certain amount of money, then you get a £1,000 bonus from the government. So this slide explaining how it works here. So if I take the first example going down, using the example of 33%. So here's someone, they were working 100% of the time, they're now only working 30. You've reduced their hours because you can't afford to keep them on 100%. They're now going to work 33% of the time. So this means that using the maths, 100 minus 33, 67% of the time the employee is not going to be working. So what happens there? So that 67, you effectively divide it into thirds. So using my accounting brain, we'd say that's roughly 22%. So we'll call it 66% for ease. So 22% is a third. We've got 3 lots of 22%. So first lot of 22%, that has to be paid for by the employer. So as I mentioned before, this is a bit of a sting to the employer. They have to pay 22% of the employee's wages for them effectively doing no more hours. They're still only going to be doing the 33% of their hours, but the employer has to pay another 22%. The government, though, will also pay 22% to the employee, and it's done. And I'll talk on how it's done, but effectively the similar process to how the furlough claim was done. This is what we believe. Again, the guidance hasn't come out, but we believe it will be similar using the HMRC portal. And then that leaves this final third, which effectively is the reduction in the employee's earnings. So that third, that other 22%, is what the employee is effectively going to lose out on if they were comparing their normal 100% salary to what they're going to end up getting. So in that example, in the first column going down, the employee ends up with 78% of their salary. So you can see as you go along, and I've just done a few examples just to show the impact of that. You can see how as you go along, if I take the other extreme of say 70%, so if the employee was working 100% of the time, you're dropping them down to 70%. So that leaves, therefore, 30% that's left that the employee is not working. Again, that gets divided into thirds. So that's 3 lots of 10%. So the government will give 10%. The employer has to give another 10%, and then the employee has to give another 10%, which means they end up with 90%. So I appreciate that's probably a lot to take in. We will have these slides available, I believe, so you can have a look at these and work these things out later, should you wish. Okay, so moving on to say just quickly, as I just mentioned on that job retention bonus. So yeah, it's £1,000 grant, which does interplay with this. Well, the employee must be on a minimum of £520 a month across a 3-month period, and we're hoping that say details are going to come out soon on that. So that is a whistle stop tour of the JSS. I say you may have questions later. There will be a Q&A on that. But moving on now to the second thing that I was going to speak on, which is the Self-Employment Income Support Scheme, the SEISS. So this one is a little bit easier to explain. But essentially, for self-employed people, individuals, they've announced two further rounds, one in November to January, the quarter November to January, and one from February to April. The way it's going to work is the one that's from November to January is going to pay 20% of the average monthly profits, capped at £1,875. So that £1,875 is a lump sum for the 3 months. So that's not a huge amount at all. And the aim is, again, unlike furlough and unlike the original SEISS, is not to give people who are self-employed an income. This is merely to help and support those that have lost some income to try and supplement that income. And that's really the fundamental point of the scheme. The value for February to April hasn't yet been decided. They will do a scheme. They haven't yet confirmed how much it's going to be. And they haven't as yet. The SEISS has always been somewhat delayed compared to the furlough, which gets announced very quickly. The SEISS, as much to the pain and stress of self-employed people, gets told somewhat down the line. So we are, as it says there, we're waiting for when exactly the dates of when you can apply for it. So moving on in terms of the SEISS eligibility. So this is the big one. It is as follows. You have to be carrying on a trade that's been affected by coronavirus. And the new subtlety compared to the old SEISS to this, which is as follows. The requirements are to be, you have to be actively trading at the moment and to be impacted by a reduced demand. These two bits are new compared to the last SEIS, and HMRC is expected, I think, we believe, to publish further guidance to clarify the meaning of these terms. What does actively trading mean and impacted by reduced demand? But as far as we believe, it means that the businesses effectively they've still continued and they have not closed during the pandemic. And if they have closed, you can't then claim for this. You have to have been continuing during this time. Certainly, I've read recently in the ICAW tax faculty that really the policy decision is designed that said that only viable businesses are supported, and it's to align the scheme again with as I mentioned before, the JSS, the job support scheme. Again, in the same way that the job support scheme is there to keep employees who do have a job, and there is a job for them, albeit on reduced hours, the same principle for the SEISS in that respect. And so, yes, this 20% is similar to the 22% that I mentioned earlier for the JSS. So that's where they're trying to harmonise those 2 points. So other key considerations, other qualifying criteria, is you have to, similar to the old SEISS, you have to have traded in the tax year 2018-2019 and submitted a self-assessment tax return on or before the 23rd of April 2020 for that year. You have to have traded in the tax year 2019-20 as well, and you intended to continue to trade in the tax year 2020 to 2021. As with, again, the old SEISS, you have to have had profits less than, your average profits have to be less than £50,000, and that more than half of your income has to have come from self-employment. So, and they'll look at that, reference that to your trading profits and total income in 2018, 2019, and the average, and after that, then the average trading profits and total income for a 3-year period, the 3 years before that. Again, for those of you who are self-employed, if you're watching this and you've already applied for the scheme, it's the same, exactly the same principle and the same logic to that. Sadly, again, the one area that has been overlooked is that the scheme is not available for people working through their own limited companies. And so again, those SMEs that are watching that have directors and perhaps on a small salary and dividends have yet again been neglected on this, sadly. So that's it from me on those 2 points. So I'll now pass over to my colleague Neil Driver to carry on.
Thank you very much, Stephen. As we went through at the beginning, I'm going to talk about bounce back loans and various other tax changes that have happened with VAT and so on, to take you through the recent updates on that. Now, I think broadly speaking, unlike the support schemes that Stephen has been talking about, where you could say that the government support is reducing, they are loosening the support or the repayment terms with a lot of the details that I'm going to be talking about, because they've cottoned on to the fact that there could well be a cash flow crunch for businesses that are still surviving, having to repay a lot of tax in January and March next year. And we're going to close the business bounce back loans and C-bills, but they're extending those on. But I'll just take you through some of those in a bit more detail now. So the bounce back loans, very, very popular, very easy to apply for through a simple questionnaire online through your bank. And those are for quick loans of between £2,000 and £5,000, but this cap of 25% of turnover still applies. None of the terms for the C-bills and bounce back loans have changed, either for better or for worse. So this is just a recap of what they have. The deadline for that was before the end of November, but they've now extended that out by about a month to the end of November 2020. So there is still a little bit of time to apply and get those in. The significant change with this is on the repayments. Originally, the schemes were set up for repayment over 6 years. That is now given a longer time to repay over 10 years. So because of that, the repayment process and the repayment amounts have nearly halved, which is very welcome. You can also change to how you make those repayments and the profile of them. You can have interest only for 3 6-month periods, or you can even take a holiday payment completely. But that holiday payment is only available if you've already made 6 payments prior to that. So these are very welcome relaxing of the rules. As far as larger loans are concerned, the C-bills, the coronavirus business interruption loans, again, those have had their repayment term extended of up to 10 years, again, kind of almost halving the repayments that are required. That was due to end tomorrow. The applications need to be in by the 30th of September. Those have now also been extended on for 2 more months to the end of November. So there has been quite a big rush for businesses to get in. We were seeing that a lot with our clients. So there is now more time. There's a bit of a backlog in processing with the applications that have been put in already. You can apply through your own banker, or we can facilitate a search across a whole many lenders through a funding portal that we've got access to. The process is a bit more complex than with the bounce back loan. You do need to submit accounts, you will need management accounts, and also you'll need copies of bank statements, but you don't always need to have financial forecasts or a business plan going forward. So you should really think about that if you need to. The Treasury is working on new programs to replace those, but they won't launch those until January. So there'll be a little pause sometimes in December. I think that replacement schemes are going to be vital to getting the business going again and keeping funding the economy as we hopefully come out the other side of the COVID issues. So let's see what they come up with. Watch this space, as they say. And for very large corporate companies, the Bank of England financing facility is going to remain open longer to the 22nd of March, but that's for more complex, large-scale businesses raising corporate paper rather than bank loans. At the beginning of the lockdown and COVID, there was a period of 3 months for deferring VAT payments that were due between March and June. Those were originally going to be repayable in one hit at the end of March, or if you're self-employed, the 5th of April. Now, the government have seen sense to spread that, and now you're going to be able to spread it in 11 installments over the financial year, April 21 to March 2022. You're going to have to opt in. They haven't quite said how that's going to be done yet, but it won't be something that happens automatically. So you'll need to take active action to arrange that. And there's also a deferment for self-assessment for personal tax, where the tax payments in the middle of July 20 just gone were automatically deferred by HMRC. Some paid it voluntarily, which was fine, but a lot of it was just rolled forward for another 6 months to be payable by the end of January next year. Now there's a 12-month timescale that can be set up for that. Again, that can be done online, but provided your tax due is only up to £30,000. If you've got higher liabilities than that, it will be a separate phone call to their time to pay department as normal to set up an option for that. Now, undoubtedly, that will be able to be spread over a similar time scale, and hopefully they're not going to be too strict on the requirements for that, but it's outside of the automated or the spreading that is a given. So that means that the tax that was due at the beginning of next year can now be pushed all the way through until early 2022 on both VAT and income tax. Now, there isn't a facility for corporation tax per se, but again, we're having discussions and helping businesses spread those with a phone call to HMRC. So those terms are available, they're just not being publicised or put out there by the government specifically. There was a temporary cut in VAT for tourism and hospitality, down to 5%, and that is now going to be extended from mid-January to the 31st of March at the moment, after which time it will go back to 20%. Those were some of the changes in the announcement just made, or the main changes, but I just wanted to recap on what was still out there, should you have missed them coming through the past several months. So there's still business rates relief that is out there for the current tax year. You get that through your local authority that you're paying rates to. Make sure you tap into that if you haven't already done so. There's also some discretionary grants available for up to £25,000, but those are through the local authority at their discretion. But if you already claimed under any other government scheme, bounce back loans or so on, apart from the job retention scheme, then you're not eligible for that. There's some lockdown grants available locally for a smaller amount, £1,500 every 3 weeks for a premises that's closed. But those have got to be, again, on a local basis. And there is a future fund more towards tech and innovation, where the government is match funding and providing convertible loans for quite substantial amounts. And those are, again, the extension for that has been extended through to 30th of November to match all the others as well. There's a kickstart scheme for employing young adults, which covers up to 25 hours of work per week for a 6 months placement, provided that the individual is 16 to 24, and a few other criteria as well, such as receiving universal credit. And you have to go through a bit of a process to look at how they're coming onto the kickstart scheme. There's still the apprentice bonuses going on. If you hire a new apprentice, 16 to 24, there's a £2,000 bonus. And if they're over 25 or more, that is reduced to 1,500. That's been around for a while, but that is still out there. And those are the main elements I wanted to go through. From my point of view, and tying into the presentation on cash flow and finance I gave a little while ago, just make sure that you do check what's happening in your business, make sure that you're on top of your finances, make sure that you are taking advantage of all these elements that are out there. Some of them are a bit more complex now, as Stephen was explaining before. They're not necessarily a black and white decision, but the funding side of it and all the grants and things that are available, do make sure that you take what is due to you, and certainly in terms of your cash flow planning and business planning. Things are moving so quickly at the moment, both with what's available out there and what's happening out there. Do make sure that you stay attached to your numbers, look at your forecasts, and make sure that you are doing what you need to do. Hard decisions, easy decisions, but these are things that we've got to revisit a lot more often than we ever have done before. And if you need help with that, we're here for you. So that really finishes the presentation for now. We are going to move on to the question and answer session. I think a few have been coming through, but Joe's going to help field that so far. So what have we got going on, Joe?
Okay, so we have a couple of questions in from Richard, which I'm going to steer towards you actually, Stephen. So we're considering asking the team to take a voluntary pay cut. Is it lawful to do this and enter the job support scheme based on the new lower basic salary?
Well, I mean, I would say this is more an HR question,
yeah.
and a legal thing than an accounting question. So I would say speak to your HR people on that, to try and, I guess, force your employees to take a voluntary pay cut. You would have to go through very much the due process in that respect. So the answer to that one is, unfortunately, I don't know, can't comment, and you would need to speak to your HR people. But the fact is that if they are on a salary, whatever salary that is, you can cut their hours to give them this lower amount, say as long as it's 33%, but that is still from their basic salary that they have agreed in their contract. So any variable part to that, I'd say speak to HR on that point.
Okay. Got another question here about the process. So with the job support scheme, what's the process to apply for this, and how quickly can you expect to receive funds back?
Yeah, well, we imagine, again, the data hasn't come out yet, but we imagine it's going to be very similar to the furlough scheme. So if you have a payroll providers or you're doing it yourself, then you'll know that after the payroll is produced and you've done the RTI submissions, it then allows the HMRC portal to be opened. And through that portal, we would imagine that, similar to the furlough scheme, you would enter the employee's details, then things like the national insurance number, the date, the period it's relating to. And HMRC, I have to say, to their credit, with the furlough scheme, perhaps we're finding out now more of the fraudulent stuff, but in terms of the speed that they were actually giving claims, it was very, very impressive. I mean, it was in a matter of single-digit working days that the claims were received into clients' bank accounts. So I'd imagine it will be similar to that for the JSS.
Okay. And another question here from Richard: is the scheme available to directors like furlough was? Yeah,
I saw this question. It did make me smile. The reason why it made me smile is, one, they haven't actually confirmed that it's available to directors. But the one thing I would say is that the directors there could potentially be quite significant abuse. I mean, whether it's illegal probably, but the directors can manipulate it themselves. They can put themselves on whatever salary, £3,000, the maximum amount I was saying in the talk earlier before, just to effectively get a 22% payment from the government. So I would imagine that there will be some anti-abuse or rules that will come out for this. Nothing has come out for direct. I haven't seen anything specifically about directors, but I would imagine because it can be easily manipulated, that that potentially won't be allowed. But we'll have to wait and see what the rules come out as.
Okay. Question here, which I want to direct to you actually, Neil. If I've had a bounce back loan, can I still apply for a CBILS loan?
Yes, you can. The bounce back loan is just one kind of form of CBILS. If, for example, you have your bounce back loan of £50,000 and you're applying for a CBILS of 200, then that first £50,000 of the 200 is deemed to already been allocated to you. So you would only get 150 on top of the 50 you've already had. Yep. You do normally merge the two loans into one, so that you've just got one lot of repayments to deal with. But you are still eligible, absolutely. If you've taken a bounce back loan, yep. You can absolutely 100% still apply for the CBILS. Okay.
And a further question, I think it's more clarification really, is it both income tax and VAT that you can defer?
Yes, it absolutely is. There'll be two separate arrangements that you need to make. So the income tax and VAT, income tax is going to be a year from January, VAT is going to be a year from next March, but you're going to be able to spread them both 100%, yes. Okay. The income tax has got a limit of £30,000 to kind of spread without having to contact or speak to HMRC. If your income tax liability is more than that, then you're going to have to phone up and make a call. But most definitely, they're both now able to be spread. But if cash flow is good and you want to pay straight away, then I'm sure HMRC will take your money as well.
Okay. We've got time for one more actually, so I'll aim this one back at you, Stephen. And with the self-employed scheme, can you still work whilst claiming?
Yes, absolutely. Yeah, again, as I said during the talk, the aim is just to supplement your income, not to replace it. So this 20% very much is there just to help you a buffer if you're struggling, if you're having tough times, to give you a little extra while you're having this, let's say, this loss of income. So yeah, very much. In fact, it's compulsory. You do need to be working and have worked and continuing to work during this time.
Okay. Right. Okay. Well,
before we finish, Joe, I'd just like to mention one thing. There's been a lot of talk in the news recently over the last few days about scams and and bounce back loans in particular being subject to identity theft, with fraudsters setting up companies and using identity theft to take out bounce back loans on someone or a business where they've got no idea it's happening. Now, you must be vigilant about that. If you receive any emails that look odd from HMRC, or you get phone calls from people pretending to be HMRC, they likely are to be fraudulent. If you're in any doubt, please contact us and we will let you know, but you must be very, very careful, even more so than normal at the moment with all these extra things going around. So I just wanted to make sure that people are being vigilant.
Yeah, no, good point. Thank you, Neil. Okay, well, that brings us to the end of our webinar. We will make a recording of this available on our website later on. Obviously, if you want to know more about how we can help you, these are our contact details. I'm sure Stephen or Neil will be more than happy to take your calls. And just remains for me to say thank you to Neil and Stephen for your presentation. Look forward to our next webinar. Thank you.
Yeah, thank you. Thanks everybody for tuning in.
Thank you.